Hi, this video is about refinancing your mortgage. Now what I hope to accomplish in this video is to give you some things to think about before you go out and do this. When you originally purchased the house, the loan that you got was called purchase money, and this has really important legal implications. In the event that the lender had to foreclose on you and there were any deficiency, for example, in the current market, a lot of houses are worth less than the debt. Well, in these scenarios, if you use purchase money and you haven't refinanced, the lender cannot sue you for a deficiency judgment. And that's called a non-recourse loan. So when you refinance, in most cases, you lose that protected status. So it's very important in today's environment, especially with the declining real estate prices, that you don't unnecessarily give up that legal right that you have. Now, of course, there's still many good reasons why you would refinance, and for the most part, a refinance, especially if it's with a different lender, would only occur if you had equity in the property, and usually you have to have 80% equity, or if it's a rental property, it might be 65% equity or something like that. Lenders generally don't refinance mortgages with high loan-to-value ratios. They tend to only do it when it's at a safe rate, 80%, something like that or less. Now, if your house is worth less than what you owe, and if the lender is offering you a refinance, you need to be careful, because chances are what they're doing is they're trying to take away that legal right so that they can sue you later and get a deficiency. At least that's one theory. Who knows? Who knows what your actual situation is? But assuming you have equity, let me go through that a little bit. The best reason, of course, to refinance is to get better interest rate, better terms. If you're refinancing because you're behind on your payments and then you want to consolidate those back payments, or maybe have credit card debts into a new loan, that's another reason why people do that sometimes. But if you're behind in your payments now, you might fall into a loan trap, is what I like to call it. For example, when you become 60 days tardy on your loan, then the lender is going to put a ding on your credit report. And a lot of times that's going to prevent you from getting a loan refinance. So when you go into the lender, a lot of times what they'll do is they'll give you preliminary approval without making a thorough review of your credit rating. But at the time, and what often happens too, is because the lender is counting on that loan, they may continue to miss their payments, becoming more and more delinquent, and so they may have gone from a 30 days late to a 60-day late or worse, and at the time that the loan's about to close, the title company is doing their final review, and then they're finding these late payments, and that a lot of times is cause to not approve the loan, and now the homeowner is really going to be stuck. So if you're not making your payments, you need to make sure that you don't fall 60 days late on your loan, because that could prevent you from getting the loan. Now, assuming you have equity, you also have to be careful with some dishonest lenders, and I would recommend you stick with large reputable lenders, because there's a tendency out there for lenders to put in, if they think you can't afford the loan, they may give you the loan and put in prepayment penalties and so forth, so that if you can't afford this loan and they know you're going to have to sell, then they get a large prepayment penalty. In fact, there was one homeowner I was helping a few years ago, and this was exactly what happened. They gave him a payment that they knew he couldn't afford, and they put in a prepayment penalty. I think it was like $11,000 or $12,000. It was a big one, and so he refinanced. He immediately couldn't make the payments again, and he was about to refinance a second time, and they were going to do the same thing again. And then he decided to sell the property, which was really the best thing. And so he got what equity he could get left out of his property, and I think he got $100,000 or something, which is actually a lot of money in today's world. And it could have been nothing had he refinanced, because he would have just fallen further and further behind. And then at some point, homeowners can't get additional refinances because they just run out of equity. So that's really an important consideration right here. If a homeowner gets into a situation where the only lenders available are these so-called foreclosure rescue companies or hard money lenders, really it's time to consider to selling the house, because these loans usually don't go well for the homeowners. High fees. In fact, one case, I think the interest rate was about 11 or 12% on the first loan. The second loan was about 18%, and those are credit card interest rates. The payments were amazingly high, and when I came into the situation, I kind of advised him of what was happening to him, what trap he had fallen into, and this helped him understand why he needed to sell. And then, so he was able to make the best out of that situation at that time. If you aren't able to make the payments and you have equity, these lenders will foreclose, because that's how they can make their money sometimes. So when you're doing a refinance, please proceed with caution. And again, if you're underwater in your mortgage, and if your current lender is offering you a refinance, and if it was the original purchase money, I'd be really careful about that. I would talk to an attorney, or talk to somebody who can help you understand what's going on, because you really need to protect yourself and not give up those important legal rights that you have.